Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 12th, 2025, and we're diving into the latest earnings report from IHS Holding, one of the largest independent owners and operators of shared communications infrastructure. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. I'm excited to discuss IHS Holding's performance and what it means for investors.
Revenue and profitability overview. Let's start with the top line. IHS Holding reported a revenue of $455.1 million for the third quarter of 2025, marking an 8.3% increase year over year. John, what are the key drivers behind this growth?
The revenue growth is primarily driven by organic growth in tenant revenues, lease amendments, and new site constructions. Additionally, favorable foreign exchange movements, particularly the appreciation of the naira, contributed to this increase. The company also saw a significant rise in operating income to $159.9 million, reflecting improved operational efficiencies.
And how did this translate to net income?
IHS Holding reported a net income of $147.4 million, a substantial turnaround from a loss in the previous year. This improvement is largely due to a favorable movement in net finance income, driven by stable foreign exchange rates and reduced finance costs.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 10 cents for IHS Holding, but the company delivered an impressive 45 cents. John, what does this significant beat indicate?
This substantial EPS beat indicates that IHS Holding has effectively managed its costs and leveraged its revenue growth to enhance profitability. The company's strategic initiatives, such as cost-cutting and operational efficiencies, have clearly paid off, resulting in a much stronger bottom line than anticipated.
With only one analyst covering the stock, how should investors interpret this result?
While the coverage is limited, the significant beat suggests that IHS Holding is outperforming expectations and could attract more analyst attention in the future. Investors should view this as a positive sign of the company's financial health and operational strength.
Operational efficiencies and future outlook. Moving on to operational efficiencies, IHS Holding reported an adjusted EBITDA of $261 million with a margin of 57.5%. How does this reflect on their operational strategy?
The strong EBITDA margin indicates that IHS Holding is effectively managing its operational costs while expanding its revenue base. The company's focus on strategic initiatives, such as reducing debt and enhancing cash flow, is clearly yielding results. Additionally, their partnership with TIM S.A. to build up to 3,000 new sites in Brazil highlights their commitment to growth and market expansion.
What can we expect from IHS Holding moving forward?
Looking ahead, IHS Holding's strategic focus on debt reduction and operational efficiencies positions them well for sustainable growth. Their expansion plans in Brazil and continued focus on cost management should support further profitability improvements.